All right, let's go ahead and get started here. So welcome to tonight's lesson. It's been a while since I've been speaking to you guys. So like I said, if you have questions on anything that's happened over the past 3-4 weeks since we talked, and obviously on that market volatility, go ahead and let me know. My name is Brian Kahn, and I'll be with you for the next 30 minutes or so, and we'll be talking on long-term and short-term trends as well, like I said, as touching on some of that recent volatility. So I will be pausing here and there to check back for questions. Make sure you use that question tab, as it always does lead off into good tangents, and we can dissect the charts and go into various subjects from there. Let me just let this next slide come up where you can all quickly read this disclaimer. And again, while you're reading, this disclaimer is very important because, as you know, leveraged products such as Forex can move very, very, very quickly. All of the recent news announcements that we had, things can change on a dime. Yesterday was a good example of that, where there was a lot of talk coming out of Europe and things were moving around, and our trading ranges were well above normal. So that's just the time we're in with the markets. That's a good thing because it provides opportunity, but obviously you also have to have the right amount of defense in place, which is basically you and your account management as well as trade management. So tonight we're going to go into a little bit of fundamental analysis. Then we'll flow right into linking that fundamental analysis into what are the traders doing with it. So we'll see the charts and the factual data. So we'll use technical analysis. We'll also link some various markets. We'll look at equity markets as well as that relationship with foreign currency markets, and then we'll get into specific sectors and things like that. And then, like I said, we'll focus on those long-term trends and short-term trends. So before we touch on fundamental analysis, I just want to make sure that you know how much help there is out there on Interbank FX. So I'm just going to bring up another window very quickly. So I usually post every single day in the Daily Forex Trading Edge in the market analysis section. So I don't think my article was posted yet today, but it should be up there soon. But you can see yesterday's article. So I'm trying to keep you in touch with the markets and trying to update these webinars basically in more real time with what's going on daily in the financial markets. And I do focus on the relationships, those intermarket relationships, because they provide good edges. So you'll see a bit of foreign currencies, you'll see a bit of options, and equity talk. You'll also you'll see how, since I deal with clients that have money invested in the markets and equity markets, and now that they've moved down, we're talking a lot about defense, defending 401ks, defending IRAs, defending pension plans, defending their overall investments in the stock market. So you'll see some of those relationships as well. So it's not just focused on Forex, it's a little bit more broad. And not only am I there probably about once a day, but if you're looking for more updates that are right with the markets, the new social media, I guess, site on IBFX, the IBFX Connect, you can go ahead and log in there for free, and then you can follow me, and I am the Locals Take. So the Locals Take would be my name, and you can go ahead and make sure that you are seeing all of the notifications that I'm posting. So I've been in there most of the day yesterday, very late yesterday, and then today about a half day as we saw volatility died off rather quickly. Let's see, a question already came in. What effect does disclaimer have when we are not in the USA? I'm not on the legal department. I'm going to say that disclaimer is all-encompassing, so I would stick to it. But, you know, that's, I guess, your decision what information you take with it. But all of this is for educational purposes. You have to know that there are no recommendations coming. And that's a big thing. What I do is I consult and I teach people to trade and invest. I teach people to protect the markets the money that they've put into the markets on the equity side and things like that. I teach them the relationships. So the first and foremost, you are the system. You've got to know what works for you. How much time do you have to focus on the markets? When are you in front of the markets? Is it the Asian session, the European session, the American session? How big is your account? Is that account a small part of a much larger, cash balance or equity balance, something like that? Or is this the last, amount of dollars that you have to trade? So every single person is different. That's why when I teach I do a lot of these webinars that are mass, but I do a lot of teaching it one-on-one. It's got to be, because every single person on this webinar tonight is different from the next person, and you're in different places in life, and you have different goals and different risk tolerances and different time available to be in front of the markets, different learning curves. So you can take all this information and try and adjust it, I hope, into what works for you. That's where you have to be savvy. That's where the quote-unquote system comes in. You guys, each individually, are your own system. Once you get over that and understand who you are and what you can achieve, you can be a very, very profitable trader, a very safe trader, and, you know, as far as looking for good locations, good low-risk, high-reward opportunities. There are no guarantees out there. That's why we deal with account management and trade management and things like that. But you've got to know how that breaks down for you as an individual. That's the first lesson I go over with people, is how much money they have, what kind of trading they're going to be doing as far as time frames, and then we set a very, very small risk amount that they can handle, like water off a duck's back. The money that's going to be lost on a trade, I don't care if you have the best trading plan and then someone decides to leave a package in Grand Central Station, or, you know, drive an airplane, fly an airplane into a building. This stuff can happen. It has happened. We know it. Someone speaks or downgrades something. These are happening. These events are happening every day, basically, and it can change the markets on a dime. And if you're over trading and you're focusing on the dollar amount, then it's going to be tough. So make sure that you understand that the dollar amount that you're risking on each individual trade, it shouldn't even be coming into your conscious thought. You should be saying, I have a good trading plan. That's why I'm trading. So make sure that you're filtering out whatever I am saying for you as an individual. So going back into the slides here, let's get back into fundamental analysis. So like I said, the questions are great because they always lead into, hopefully, some good education, some good sidebar topics for you guys to digest. Current events, there's probably too many to speak of, but there is some interesting stuff out there. Overall, our Federal Reserve has come out since you and I met, over a month ago. We've had downgrades, we've had debt ceiling, we still have debt and credit stuff going on in other areas of the world. So one way to try and stay on track of that news is through the Interbank FX website, and one site that they use very heavily that you can link right to, and I actually have it already pulled up, is Forex Factory. So this is the regular economic data and most of the speakers. Like I said, there's tons of speakers coming out, so we won't catch everything. There's always going to be surprises coming out. We won't catch everything. But what's interesting is today we had some data on inflation. In the United States, we had producer price index, how much it costs a producer to go ahead and produce the goods, and obviously if it costs more for them, they're going to try their best to pass it on to you and I. Well, these were very elevated. But for the next 2 years, the markets may not focus on inflation data. Why? Because the Federal Reserve in the United States has said, we're going to keep interest rates low basically through 2013. We're not interested in raising rates, or we're not interested in raising rates much, that's for sure. So if there's price pressures out there, it's because we created them and we import lots of goods out there, and if other dollars do get stronger compared to the United States, well, great. We are okay with that happening, is what the Federal Reserve is saying. We don't see inflation out there, is what the Federal Reserve is saying. So some of these numbers used to be important. Some of them aren't important now. They may come back into focus down the road. But again, that's what you have to filter out. That's where the fundamental information first starts to help you. Like I said, if there was a very big decision today on interest rates or whatever it may be in a currency that you're trading, well, that may drive prices. You've got to know that first before you get into the charts. Okay? It's very, very important. So between forexfactory.com, which you can access through Interbank FX, CNBC is a great television, station. There's also Bloomberg.com. They also have a great website. So you've got to have an understanding of some of the big drivers out there that are affecting these markets. Then we'll segue into technical analysis and say, given all this news, what are the traders doing with it? Again, as I just showed you, between IBFX, the Connect, the Daily Forex Trading Edge, these webinars, your broker has a ton of great information. And then obviously the internet in general. Anything that you're looking for that I speak of, that you hear of on TV, you could probably find it. All right, so just make sure that you're using your tools. I'm not saying that every single site out there is useful, and I'm not saying that you have to spend all day doing research, but again, that's where you filter it, what matters for you. Someone who's only a day trader is going to be very different than someone who's using foreign currencies to maybe protect or hedge a big investment in gold or commodities or energy or the stock market in general. So everybody out there, again, is trading for different reasons, different time frames, different styles and strategies. Technical analysis. What are the traders doing with the fundamental news? Let's go look at some live market examples and bring in those intermarket relationships. A really fun chart as of late, as we start to head into the MetaTrader 4 platform, is going to be, let's see, is going to be the daily chart on the pound. Okay? So let's go ahead and look at this. I'm going to move this little sidebar here. So recently we've had a lot of good resistance in the Great British Pound US dollar. Over the past couple of days we kind of approached it. That's not the best trend line, but I'm just kind of going sideways here. All of that resistance there, that's what you're looking for in the charts, to say this resistance was stopping us in the pound and we couldn't go any higher. Okay? Now, over the past couple of days, something has driven the pound to gain some strength against the United States dollar. So overall, let's start to talk about these trends and these relationships. So let's go back just a few months and kind of see what's going on. Overall, are we trending up, down, or sideways on this daily bar? Well, if we go to the left side of the chart here and start here, we're basically down and up, but basically we're kind of sideways. We're a little bit higher, yeah, but most of the time we've been kind of right in the middle. So it's hard to say that the pound is trending long-term in any one direction. And again, long-term and short-term will mean different things to traders out there. But basically for the past 7-8 months, we've been kind of sideways in this range. As we start to shrink down now, and start to look at more recent data, we can focus over here on the right side and say, wow, the pound really has only been up this high once previously, way back in April of this year. And that's obviously when the stock market was higher than where we're at right now. So you could say that if there's relationships right now between the stock market and foreign currencies, well, I don't know if you can derive that for the pound US dollar relationship. You may be for others, but maybe not for this one, because the pound isn't so different than where it was well before the stock market started to roll off. Okay, going a little bit shorter term and just looking at the past few weeks or so, we can see that the pound has had a really big run. And again, think about it in pips, moving from 1.6100 roughly all the way up to 1.66 or so, so about 5 or 6 pennies as it moved up. So something is really causing the pound to gain a lot of strength against the United States dollar. Let's just compare that just to another currency in the same area, in the same region of the world. And again, here's the euro. The euro started a little bit lower on this daily chart, and for the most part is a lot higher. But look at this. All of April, all of May, all of June, we're basically in a pretty tight range for all of that volatility. We're only in about a 5-penny range right in this area. Okay, that's not huge. It's plenty for us to trade. There's no doubt about it, but it's not huge. And we know the pound has taken off to the upside, but you can see by looking at some trend lines and things like that, whether you want to draw a trend line down like that, or maybe a shorter term one, something like this, okay? The euro is having a little bit harder time gaining that ground back against the United States dollar. It may pop up there, we don't know, but it's sitting right in kind of a critical area right here around the 45 area as it has these trend lines to deal with. This probably second trend line right here, probably a little bit more valid, I would say, because it touches more points. So I just drew this very quickly, but this one obviously has a little bit more validity to it. And again, like I said, I'm just checking back and forth for questions here, so make sure that you're, as soon as anything comes up, on any topic, please let me know. I may not address it right away, or I may not address it if it doesn't mean something that will add value to the entire class tonight, but please ask away. So that's the difference right there between the pound and the euro. Again, going to a shorter term chart, we can start to see there hasn't been as clear as an up move in the euro as there has in the pound. So we're looking at, let's see, let's put them on the same time frame. So they're both on 1 hourly. So here you have it taking off the pound. Here you have the euro. But again, the euro basically is sideways the 15th of August, the 16th of August, the 17th of August, straight across. Well, here's the 15th of August in the pound, the 16th of August and the 17th of August, so it's definitely higher. So the pound is stronger than the euro if you compare those two currencies for sure. All right, let's move into the Australian dollar versus the US dollar. Let's go back to a longer term chart. So here's the Australian dollar versus the US dollar. We know that gold prices are going through the roof, and I'll show you that in just a moment. But that's not true for the Australian dollar. When the stock market collapsed, over the past few weeks, look what the Aussie dollar did. 1.1099, so 1.11, all the way down to roughly, and again I've got to move this sidebar here that you can't see, down to about 99, right to parity, and it bounced off parity. It's a big move, 11 or 12 pennies for sure. Right now, we're kind of back in the middle ground. The stock market's been climbing back up. We know gold's been surging to new highs, and again, I'll show you that. But look at this. If I draw a Fibonacci right here, let's see. So it's back about 50%. You can eyeball that and see that, but that's why Fibonacci's are nice. They kind of go ahead and give us that math. They do it for us, basically. So it's come up basically almost touched 61% back today. And the point is, we've got to understand the fundamentals driving it, the technicals driving it. What are they saying in Australia about their economy and interest rates? What does that mean against the United States dollar and our interest rates and our economy? Well, we had a huge down move. We've retraced back up. Are things good enough for the Australian dollar to keep gaining strength, 106, 107, 108? Maybe not. Maybe people are starting to get bearish here, and they're saying the long-term trend was the longer-term trend was down. The shorter trend was up, and if we look at it on this, we see this shorter trend up. Maybe people are starting to get bearish. Maybe they're seeing that this trend has gone too far, and they're looking for reasons, for technical reasons or fundamental reasons or both, to basically maybe even get short and have it roll over. Who knows, as it starts to get pricey again, we can say pricey in quotations. We don't know what's too expensive or too cheap, but it's getting pricier and getting back up towards those old highs, 108, 109, 110, 111. Just to show you the difference in these intermarket relationships in what's going on with gold, we can look at a chart of GLD. All right, so some of you want to partake in gold using options, using stocks and things like that. So GLD follows and tracks gold futures basically and doesn't require the same margins that futures do. Let's go ahead and look at it on the time frame here. So we're looking at a one-year chart. Look at gold. There's been no stopping gold over the past year, and it came off a little bit, and it's right back on its highs. The Australian dollar isn't near its highs. So previously, the Australian dollar and gold were kind of trading one-to-one. Now the underlying physical gold is outpacing the Australian dollar for sure, the currency. Okay, moving back into options here. New Zealand dollar we're not going to focus on too much. It's looking pretty similar to the Australian dollar currency. So the New Zealand and Australian are sharing the same moves. Again, here's that move down when the stock market crashed and right back up to 50%. Look at the past few days. This is a daily chart. We're in pretty tight ranges the past few days here in the New Zealand dollar. All right, we're in very tight ranges the past few days in the equity markets. The gold Australian dollars had a little bit more pop to it. Again, these are different currencies that you may be trading. You have to know the nuances of it. Maybe there was more announcements, more decision making over in Australia that made it more volatile than New Zealand. I don't know, that basically, but if you're trading it, you've got to know that very well. But let me just show you SPY on a daily chart. And let this just update very quickly. The past few days, there's been a good amount of intraday volatility, but there hasn't been those huge 400 or 500 point swings basically that we were seeing a couple weeks ago. So I'm just going to update this on a smaller time frame so we can see. Let's get it down to, looks like it's just loading, so bear with me. All right, so we'll even go down to a 1 month chart. So here's the bars for the past few days. Not much going on the past few days, all right? So just keep that in mind that the markets have kind of come back in line a little bit. Not to say that tomorrow they can't go and be out of whack again, but what's happening is we're having lots of movement that you don't see by this chart, that you see like today in the equity markets. We gapped up to the upside, and then we slammed down. We were up 100 points, over 100 points, and all of a sudden we're down 50 points. So we made 100 points, we lost 150 points. That's a 250-point move right there. What does that mean on shorter term as we start to move into shorter term trading in foreign currencies? Well, let's look at the euro today. And I'll even show you a better example when we go into the U.S. Canadian. Let's look at this on a 15-minute bar to see today's action. So today, the stock market gapped up and went running up. What did the pound do? It went running up, okay? And it was up early, basically. And then all of a sudden, this bar that I'm on right now, this is 8 o'clock in the morning Mountain Time, so 10 o'clock in the morning Eastern Time. So this is when the stock market started to give back gains and started to fall. What did the euro do? It fell hard. It went from 1.4516 to 1.442. So basically, it dropped almost 100 pips. Let's look at it on a 5-minute bar. All right. So this is what we talk about when we talk about trends and sequences and patterns and failures and targets. Uptrend all morning during the European session, basically. Uptrend, uptrend, uptrend. What you want to see in an uptrend is higher highs and higher lows. And that's what you have here. All of these lows are higher than the previous lows. All of these highs are higher than the previous highs. Then we get an ancillary market like the S&P to start moving in a big direction. 150 points is a big move. From top to bottom, it moved today. Well, finally, the euro, this is the first time that it failed right here. It made a lower low. It violated this area right here, and we have a lower low. That 100-pip move now, you can see, it's tough for the euro to recover and go make a higher high to keep this trend in place. The stock market, if it would have gone up 50 points, 100 points, 200 points, 300 points, maybe it gets the euro higher. If there's some news announcement, maybe it gets the euro higher. But the stock market hung around zero and negative for the most of the afternoon, and the euro just kind of hung sideways and couldn't recover. So basically, maybe you could become a seller. There wasn't much movement here. Again, these are pretty tight ranges going this far into the afternoon. But the bottom line is you start to say fundamentally the equity markets went down. Fundamentally that drove the euro down. And if we rally at all, maybe I want to be a seller of that rally in the equity markets, and in turn I want to be a seller of that rally in the euro. So that's that relationship. So that's where you have a violation. Higher highs and higher lows. Whoops. Finally, that big move is going to stop at some point. We don't know when, but it's going to be retraced. And finally, that lower low, that higher low, I'm sorry, was violated, and now you have a lower low. So you have a lower low and a lower high, basically. And then, it kind of turns into a little bit of chop late in the day, and that makes sense. And tomorrow's going to be a new day. Compare this, though, to the 5-minute bar for the pound. The pound never violated its trend today. The pound, as we've said, is stronger than the euro lately over the past few days. And here you see, no matter what the equity markets did today and went down, the euro went down, the pound hung in there. And it hung in on a nice trend line maybe. Again, I'm just drawing this rough. But I just want to show you the lows are higher than the previous lows, and the highs are higher than the previous lows. And that's where you can kind of draw these parallel railroad tracks, something like that. And you can see that nice trend channel. Okay? So the pound wasn't affected by the equity markets today. The euro was affected a little bit more. I told you I was going to introduce the United States dollar, Canadian dollar. Let's see what's going on here. We know that oil prices have been going up. We know that overall, the United States dollar has been getting killed against the Canadian dollar. And then all of a sudden, we had oil prices way up at 115. They couldn't sustain themselves, and the United States dollar rallies. Actually, the oil prices rallied again and up into the high 90s, and then the U.S. dollar got weak again, and then all of a sudden, the oil prices got killed and went 99, 95, 90, 85, 80, and we see the U.S. dollar strengthen basically up close to parity. So it's just hovering just below parity in this area here. But if you look at it on a shorter term, so on a shorter term chart, and again, here you are on a long-term chart daily, we started here on the left side of the chart and we're all the way over here. We haven't moved much basically, from where we started here on the left side to the right side. Definitely have trended down, but we've recovered some of that ground lately. Look at it on a 5-minute chart today. Here's the U.S. dollar getting weaker, 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 just like the dollar got weaker against the euro early and got weaker against the pound early. Here, though, is that 1400 bar GMT time when stock prices started to reverse and go down, and look what the United States dollar did in turn. It rallied sharply against the Canadian dollar. So you want to put your Fibonacci on there. There's the high of the day. There's your low of the day. And we had basically a 61% retracement in the U.S. dollar Canadian. Okay, and then it backed off a little bit and started going that sideways chop, just like most of the markets did later in the day. So there's that relationship. It starts to get violated. Lower lows and lower highs. Everything is fine. Everything is fine. Whoops, all of a sudden, more buyers than sellers, and we can't make a lower low. The sellers say, crap, I can't go any further with this. I might take my profits or get out. And the buyers look around and they say, guys, we got them. The sellers are drying up. And boom, they rally it hard. And a lot of you know reversal patterns. What reversal pattern is this? What letter does this look like? That's your perfect W pattern. That's your perfect double bottom. Equity prices declining. Oil prices probably declining as well. United States dollar getting stronger. Let's see here. The low here, let's see if we satisfy this double bottom. The low here is around 97.75. The high here in the middle, 98.01. So let's say 25 pips. If this double bottom is to satisfy itself, it's going to move those 25 pips up here to this neckline, and it's going to move 25 pips again, so we should be up around 98.25. Let's see what the top here is at this price. 98.22. So at this point, the equity markets have stopped falling. The double bottom is satisfied. You have a Fibonacci to 61.8, and it reverses course and goes from 98.20, let's round it to, down to 97.98, so about a 20-pip move. How many of you out there trading the size that you're trading need more than 10, 15, 20 pips? That's probably what you're looking for as an intraday trader, is 10 to 20 pips. And look what these moves are. They're moving in 10 to 20 pip increments, basically. So if you're looking for more than that, you have to ask yourself on today, when it was somewhat volatile but not super volatile, are you asking too much? You have to be realistic with what the charts are giving you. Here's the news out there. Here's my fundamental gut opinion. Here's the technicals telling me when and where to do things. And here's the technicals saying it's proper to risk this amount and it's proper to go for this amount of reward. That's got to be done all before you go ahead and make that trade. That trading plan has got to be in place. If you're trading without trading plans, you have to ask yourself, how good is your success? Hopefully it's great, but you'll be able to be the judge of that. Okay? So let's kind of get ready to wrap up here, but that's what I wanted you to see, is the long-term trends, some of these relationships, and then start to see some of these short-term trends and how they get violated with chart patterns, how they get violated with other markets pushing them around, how that comes into giving us big swings one way or the other and kind of a rubber band stretching and saying, hey, this pattern is exhausted. I understand this pattern. I understand chart patterns. I understand fundamental analysis. Put these two together, I can get a pretty savvy trade. And maybe you said this move from this 50 or 60 point move up was too much and you're ready to get short. Maybe you rode this up expecting it to double bottom for whatever reason here. So lots of fun chart patterns to get long the United States dollar, lots of fun chart patterns to get long the Canadian dollar, lots of opportunities today in the Forex markets overall for sure. So we got into some current examples, seeing long-term trends, seeing the pound running up over the past few weeks for sure. We got into some short-term trends and seeing how some of those short-term trends are violated. So once you see those violations on short-term trends and reversal patterns like the double bottom, United States Canadian, the same thing on that 5-minute chart, you can see that evolve on daily charts and things like that. So for some of you longer-term traders, keep that in mind. So to review, make sure that you understand what's driving the overall markets in your pairs fundamentally. Speakers, interest rate announcements, economic data, the macro and micro events affecting those currencies. Technical analysis, start to use the charts to time when and where you're going to get in. And again, like I said, we talked about those intermarket relationships and long-term and short-term examples. Next webinar will be on the 31st of August at 9 o'clock Eastern. Same thing, fundamental analysis, technical analysis, and then we'll go into looking at some resistance. Maybe the pound will have found resistance by then. Who knows? And we'll be able to use that as an example. So we'll be talking about resistance, but again, as you know, we'll be talking about other subjects as well, bringing in trading psychology as always. I'll never do a blog commentary or, Connect update, on the social connect on the Interbank FX site during the day, I'll always throw in some trading psychology, so you'll always get that. Hopefully that's beneficial no matter where you are in your trading, no matter what style of trading you're doing. And then just keep in mind that you can get on lots of education. I showed you the Daily Forex Trading Edge right here. You can use just the basic educational sites in Interbank FX. Lots of good information out there. And then go to YouTube. All of the webinars that I've done, I think this is the 8th one I've done, they're all recorded on YouTube. So if you want to review them, please go there to the Interbank FX website. And then this is my own personal blog, but again, it just repeats what's going on in the Daily Forex Trading Edge. So if you do have questions and you want to get in touch with me because you just didn't get to them tonight, that's my email. You're welcome to send me some emails and follow up. And like I said, on the IBFX Connect, go ahead and follow the locals take because I'll be pinging in basically mostly every day. So thank you for your time tonight. I'll look forward to speaking with you in 2 weeks and hopefully seeing you on the Connect and catching up on the market commentaries and things like that in between. Have a good evening.